To other news now, stock markets around the world have dropped sharply amid fears the US economy could be heading for recession. Japan's Nikkei share index plunged more than 12% at the close today, its biggest fall since Black Monday in October 1987. Hong Kong's Hang Seng fell by 1.5%. In the UK, the FTSE 100 is currently down just a shade over 2%. And in France, the CAC 40 is also down by 1.62%, as you can see on the screen right now. But let's see what's going on across the water in the US. Our correspondent James Matthews joins me now. Afternoon to you, James. The market's not long been open there, so what's going on?
Following the global stock market fall and fears of recession in the United States, Nvidia, NVDA, shares recently tumbled over 6% on Monday, contributing to a significant $650 billion valuation loss among the Magnificent Seven stocks during a market plunge. This group, including giants like Alphabet, Meta, Tesla, Amazon, and Microsoft, has seen a staggering $1.3 trillion evaporate in market cap over the past 3 trading sessions. Despite this downturn, analysts maintain a bullish outlook on Nvidia, deeming it a must-buy. Let's dive into why experts are confident in Nvidia's long-term potential despite recent challenges. The market plunge and Nvidia's drop. The recent sell-off, triggered by a hawkish stance from the Bank of Japan, disappointing U.S. manufacturing data, and earnings volatility, sent shockwaves through the market. Analysts have been stating that seasonal volatility between July and October is historically normal, especially following significant rallies in U.S. and global stocks amid mixed earnings and tight monetary policy. Amid this turbulence, the Nasdaq Composite slipped into correction territory, exacerbated by slowed job growth and a higher unemployment rate revealed in the July jobs report. Nvidia's stock took a hit, primarily due to delays in its next-generation AI chips, known as the Blackwell architecture, pushing major customers like Microsoft, Alphabet, and Meta to reevaluate their plans. Yet, analysts argue that the concerns surrounding these delays are overstated. Analyst confidence and buy ratings. Analyst Toshiya Hari from Goldman Sachs maintained a buy rating on Nvidia with a $135 price target. Hari's optimistic stance is grounded in Nvidia's strong long-term outlook and the minimal impact expected from the delay in its Blackwell products. While short-term volatility is anticipated, Hari forecasts a robust recovery and performance ramp-up, leaving Nvidia's 2025 earnings largely unaffected. Nvidia remains on Goldman Sachs America's conviction list with a projected 26% potential upside. Similarly, Citi released a report on July 31st, assigning a buy rating to Nvidia with a $150 price target. This reinforces the consensus among analysts that Nvidia's fundamentals remain strong despite the current market corrections. Stacy Rasgon, a 5-star analyst from Bernstein, also maintains a buy rating on Nvidia with a $130 price target. Rasgon, known for his accurate predictions in the technology sector, has a 23.7% average return and a 64.40% success rate. His confidence in Nvidia adds weight to the strong consensus among analysts.
Even if they do $4 billion this year, it was $0 a year ago. Okay, so that's objectively by itself, that's quite the accomplishment. But in the grand scheme of things, frankly, it's kind of a rounding error given the magnitude of what we're seeing from their competitors. And if you're looking at sort of, especially as you're going forward, you're looking at the competitive roadmaps between the two.
Strong financial performance and market position. Nvidia's latest earnings report is a testament to its robust financial health. The company reported a quarterly revenue of $26.4 billion and a net profit of $14.88 billion, a significant increase from last year's revenue of $7.199 billion and net profit of $2.4 billion. This impressive performance underscores Nvidia's dominant position in the AI chip market, holding over 80% market share. Despite potential delays in the Blackwell chips, the demand for Nvidia's AI chips continues to rise, with older Grace Hopper chips expected to fill any gaps. This sustained demand supports Nvidia's strong outlook, even as it navigates short-term challenges. Market corrections and future outlook. Market corrections, while concerning, are normal in a bull market and provide opportunities for savvy investors. Analysts believe Nvidia's recent fall is a correction rather than a precursor to a bear market. The company's significant prior rise and the mega-cap stock's declines have contributed to heightened market volatility. However, strong technical support remains, and it's too early to declare a shift to a bear market. Despite the positive analyst outlook, corporate insider sentiment on Nvidia has been negative, with increased insider selling. Notably, Director Mark A. Stevens and CEO Huang have already sold a notable amount of shares last month. While insider selling can be a red flag, it does not necessarily reflect the company's long-term prospects.
That AI has been so deep in your company, you've been building GPU infrastructure, running these large recommender systems for a long time. Now you're
a little slow on it, actually, getting to GPUs.
Yeah, I was trying to be nice.
I know. Well, too nice.
I was trying to be nice, You're
Well,
my guest.
When I was backstage before I came on here, you were talking about like owning your mistakes or something, right? So
you don't have to volunteer it out of the blue.
I think this one has been well tried. It's like I got raked over the
coals. But as soon as you got into it, as soon as you got into it strong. Let's just put it. There you go. There you go.
That's how we roll.
Now, the thing that's really cool about generative AI is these days when I use WhatsApp, I feel like I'm collaborating with WhatsApp. I love Imagine. I'm sitting here typing, and it's generating the images as I'm going.
Yeah.
I go back and I change my words. It's generating other images.
Yeah.
And so the one that old Chinese guy enjoying a glass of whiskey at sundown with 3 dogs, golden retriever, golden doodle, and a Bernese mountain dog. And it generates, a pretty good-looking picture. Yeah,
yeah, we're getting there.
That's me.
Every month.
Yeah.
Getting better.
And then now you could actually load my picture in there.
Yep.
It'll actually be me.
Yeah, that's as of last week.
Yeah, super excited about that.
So now imagine me. I'm spending a lot of time with my daughters, imagining them as mermaids and things over the last week. It's been a lot of fun.
Yeah.
In summary, Nvidia's recent stock dip amidst a broader market sell-off presents a potential buying opportunity. Analysts from Goldman Sachs, Citi, and Bernstein maintain strong buy ratings, underscoring Nvidia's resilient long-term outlook. Despite short-term volatility and delays in new products, Nvidia's dominant market position, robust financial performance, and sustained demand for AI chips support a bullish perspective. With an average price target of $142.74, indicating a 33.07% upside, Nvidia remains a compelling investment for those looking to capitalize on the tech giant's future growth. Investors should stay informed and consider these insights when evaluating Nvidia's stock. Remember, market corrections are a natural part of the investing landscape, and Nvidia's strong fundamentals make it a stock worth watching. By understanding the underlying factors and expert opinions, investors can make informed decisions about Nvidia's stock. Despite recent challenges, the consensus remains that Nvidia is a must-buy, poised for strong future performance.